Good morning, everyone. Welcome to our Wednesday morning trading room. The market's off to a little bit of a soft start here this morning. What we're looking at is really a continuation of yesterday's very sideways type trading day. Here's our first in-sync eagle signal. So as far as, oops, did I get the screen share going? As far as the eagle is concerned, it looks like the market may try to push higher. Trade forecasters suggesting that we are going to be in trend mode for nearly 2 hours, so pretty much the morning session. We'll see how that plays out. Trend mode, of course, for those of you with the trade forecaster, the trade forecaster tries to tell you what the current market condition is, as well as what the future market condition is likely to be. So we're currently in trend mode, and then we're going to be moving into swing mode after that. So what does that mean? Does that mean the market's going to take off like a shot? Well, yes and no. Sometimes the market will make a very long, smooth progression through trend mode, but the trend mode has more to do with how the market is likely to behave. There's decreased volatility during trend mode, which is very often why the market will make a pronounced move. But pullbacks will tend to be minimal and not very deep. So when the market is in trend mode, you can probably get by with a slightly tighter stop loss. You can probably do better by having a bigger profit objective, or maybe splitting up a trade, maybe having a runner in play, that kind of idea. When the market is in scalp mode, that's the other extreme, of course, the market's going to look like this, where you get very little follow through on your trades. There's going to be a lot more pullbacks. They're going to be a lot more frequent and a lot deeper. So when the market is in scalp mode, you're probably going to look at taking all your profit on target. You're probably going to have to run a deeper stop in order to make the trade work. When the market is transitioning through swing mode, well, you're right in between those two scenarios. So if we're moving from trend mode to swing mode, as we get closer to the swing environment, we can probably anticipate the pullbacks to become more pronounced, maybe increasing in frequency. So if we're running out a trade and we've got open profit, well, this might be the time to start bringing in stops or make the trade a little bit more aggressive. If we're moving from scalp mode through swing mode, the opposite is true. We're going to expect the swings to become less violent, less pronounced, less frequent. So if we're moving from scalp mode through swing mode, I can probably start with a larger profit target. I can probably start to bring my stops up a little bit more quickly because I'm expecting the market conditions not to be quite as violent as they had been. The trade forecaster is a tool like any other. It's not unlike your weatherman forecasting your weather. And by that I mean the weatherman uses the history of weather, right? They look at cloud formations, humidity, barometric pressure, wind speeds, a whole assortment of different variables, and they put those together and they say, oh, the last time we had these conditions, this is what the weather did. It was sunny, it rained, it snowed. It did all three. Well, the trade forecaster works very similar. It looks back in the history of the chart and it says, the last time these market conditions were present, this is what happened. All right, well, we had a little bit of a hiccup out of the gate, and now we are kind of pressing the short side a little bit. We're still very, very neutral though, the hawk. We were printing a first micro-macro cross here that I had my eye on, but it's gone into yellow bars. The Falcon has given us a trend change signal. For those of you keen on your early trades, get me in now. This may actually develop also into a late filter entry. No, sorry, that just got spoiled by the trend line changing color. So we're still just kind of waiting, watching and waiting. People always get frustrated when the market is moving sideways, as it is right now. Right? We're always, I don't know, maybe it goes back to working a real job where you always feel you have to be doing something. If you're not doing something, how can you be making money? Well, that is not trading. And yes, there will be moves through here. Like to me right now, it's looking like this is the top end of the trading range. We've had a test of the extreme. I'm thinking the market's going to make a run for the bottom end here. Excuse me, please. Is that a viable trade? Yes, definitely. Absolutely it is. It looks like technically we have a rule of 3 signal here that's printed on the eagle. That is saleable. If you don't want to do the counter trend, it looks like we're going to produce a with trend signal here in a moment, just as the cloud completes its crossover. But we're in a sideways trading range. This is where the inexperienced traders get chewed up. This is the grist for the mill, if you will, where the traders who don't know any better think they have to do something to try to make some money. Try to get it through your head. It's not the frequency of trading that's going to make you the money. Like I was reviewing the charts from yesterday before I opened the room, and there was maybe one viable trade for me all day yesterday. Now that's me. I know some of you would have done better. Some of you are a little bit more aggressive than I am. Oh, here we're getting that late filter entry after all. It did come back. So we have a tradable signal here in the Falcon. I think that may actually work out. We're getting, well, we don't have the cloud crossover yet. You could consider this an early cloud crossover here on the eagle. We're also getting a first micro macro cross, and we're getting the trend change signal now in the eagle. So we're kind of set up across the board for a shorting opportunity. Oh, did they slip me? Oh, they did too, scoundrels. That's not a good sign. So they slipped me a tick on the entry. Let's see if the trend mode holds. So I'm running a slightly tighter stop. Normally I would like to try to go above the overnight high here, but we'll go with the high of the morning. We're trading kind of at the bottom end of the short-term range, but we'll see if the market doesn't try to slip and test near yesterday's lows. Now, this is a higher risk trade. This is not what I would consider a low risk trade, and the reason is because of that trading range. Of course, it's not to say the trade won't work out, but just be aware going in that this is not, you know, perhaps the nicest looking trade we're going to see today. And if you're okay with that, then you go ahead and you take the trade. That is trading. I know you're tired of me saying that, but I see it all the time. I see people, you know, coming into trading and they're saying, why can't I make any money doing this? Well, it's not just, you know, pushing buttons. It's not assembly. It's you're trying to get a feel for what the market is doing and then respond accordingly. Yeah, I like Mark's comment here. He says it's the quality of the signal, the high probability, that's what makes the difference. And I totally agree with that. And if you're okay taking the risk on the trade that doesn't look like a high probability signal, it's okay. You can take the trade. Just be aware of what you're doing. If this eagle trade does not work out for me, I can't beat myself up afterwards and say, oh, how could I be so stupid? This whole DTS thing is crap. How come that didn't make me money? Well, it didn't make me money because we're in a sideways trading range and I took a chance. If I'm okay losing this amount here, then I take the trade. If I'm not okay losing this amount, then I have to wait for a higher probability setup, don't I? Well, so far trend mode's taken its sweet time getting in gear, but that happens as well, especially for the longer durations, you know, when Trade Forecaster flashes trend mode for an hour and a half, 2 hours, it sometimes takes a little while to get the wheels going in the right direction. I think the important thing, though, is you always need to be comfortable with the amount you have at risk. If you're not, well, then don't take the trade. Wait until you can find an amount you're comfortable with. Oh, Anthony's also bearish on the NQ today. He says the NQ is in a strong downtrend to 180 or 61.83. That's his target. Ooh, that's a big one. He's looking for it to sell off the next 3 days. Well, I certainly hope you're right, Anthony, because I'm currently short on this rule of 3 reversal. Note on the eagle here, the rule of 3, it's our counter trend signal. You can always wait for the with trend signal if you don't like doing counter trend trades. But what happens is you have in this case, a bullish band. Now, ideally, there should be something resembling a trend before you start looking counter trend. I'm kind of reaching a little bit here to say this is an uptrend, but we'll go with it. So we have an uptrend, and all of a sudden the market starts trading deep enough that not only do the bar colors change, but we start producing signals, sell signals, in a bullish band. Now, normally after that third signal is when the market decides to go. Sometimes a rule of three will only be 2 signals. Sometimes it will be 4. Occasionally, I've even seen a 5. But if it's more than 5, it doesn't really qualify any longer. The market should have made its trend change at that time. Otherwise, you're really just flip-flopping back and forth. As with all counter-trend signals, the rule of three must be preceded by a test of the extreme and a failure. So here's the extreme, the high, and then here is the retest. The market tries to recover the uptrend and fails. It comes down and produces more sell signals. So far, so good. We're still producing lower highs. That's good. The support on the low is still holding. That's not good, but maybe we'll see a breakout this time. That'll give us a little giddy up. I hope. The Raptor and Hawk still both here in yellow bars. That late filter entry signal on the Falcon here, again, tends to be a high probability signal. The late filter entry is normally a continuation style signal. So once again, you got to look left. You need to, who was it? Somebody in the room said you got to look left to be right. I thought that was very clever. But yeah, you got to look left and try to get a feel for what the market has been doing or might be doing. So you could read this as a downtrend, but of course, stop placement also important. Can't keep your stops overly tight when your market looks like this, where we're getting all these swings back and forth, back and forth. The good news, in a manner of speaking, is that when you're trading, you should also remember that we're all in the same boat. Nobody has all the pieces. Anthony says everything is falling. Can I check the Aussie? I most certainly can. Oh, the euro dollar is actually climbing, but give me a moment here. I will pull up that Aussie dollar for you. Here on the Eagle trade now, we're making our third attempt to move the market lower. We have to see a break of the support zone this time. Okay, here's the AD. And a nice little rally through the overnight session, which would have been the native session for the Aussie dollar, probably starting right about here on this number 2 reversal. You could have seen this signal here on the Raptor as what we call the early cloud crossover. You can see the clouds beginning to cross. Here's that little bit of a pullback. The clouds did not cross enough to actually print a number 1 signal, which came a little bit later. I'm kind of bearish on the Aussie dollar long term. But it looks like at the moment they're having a little bit of an uptick. Their session, their day must be winding down as well. Must be getting near the end of the Australian dollar session. All right, we did see a breakdown of the support zone. Hooray, that's a good start. The trade forecaster saying we are in trend mode for yet another hour and a half. I certainly hope so. And I'm going to do my best not to tweak myself out of this trade. I wonder, Anthony here is really aggressive on the short side. He says the NQ work has a 3-day trend run nonstop from top to bottom. You're making me think I should run my trade out a little further, Anthony. All right, let's take a look here at the longer term Nasdaq. Let's see if we actually breached that trend line yet. So here now the daily, and you can do this on any chart, right? If you're a day trader, it doesn't hurt to take a look at a longer term chart, whether it be a daily or an hourly. What I've been waiting for is a breach of the top end. I've been looking for a breakout higher to signal that the buyers have overreached. Kind of a breakout from this little pendant, very, very tight pendant. So I can see what Anthony is thinking. He's looking for a breakdown now below the lows. And what did you say, 61.30, something like that? That would bring us right back down here. This is pretty much where that rally began. So that makes for a very feasible profit objective. If this were not a continuous chart, there would be a gap right through here. And markets do like to try to fill gaps. So there we go. We'll see how that plays out. I will be happy with my profit objective if I can get it. Working a first micro macro cross signal now to the short side. So the hawk coming into sync. The Raptor about to produce a cloud crossover signal. So the cloud's officially crossing now. We're going to get the pullback and If the market continues lower, well, then we're going to get that sell signal. There's that pullback, looking for the sellers now to get on board. All right, here they come again, the sellers. The hawk, by the way, working itself into, from that first micro-macro cross, all the way into a 4-arrow consolidation. The Falcon now working a possible trend change signal, and we'll wait now for the number 1 signal to develop on the Raptor, providing, of course, the market is still prepared to move lower from here. Believe it or not, you probably will do better as a trader too if you treat it a little bit like a game. I know. You're saying, Eric, I got thousands of dollars on the line and you want me to treat this like I'm playing Monopoly. Well, yes, in a way. Because chances are when you're playing a game, you're not panicking. Phil Ivey, the poker player, said once in an interview after winning a huge tournament, he says, I can't think of it as real money. If I think of it as real money, I'm sunk. If you've ever watched the professional poker players, you know they're playing for hundreds of thousands of dollars in a single hand. So if he's playing for hundreds of thousands of dollars and he doesn't get rattled, you certainly shouldn't be rattled if you have 300 or 400 on the line. Well, the buyers are fighting back. Not what I wanted to see, but characteristic of a sideways trading range. Russell's asking, heard much about the new Fang? No. I, I tend, I don't even know what that is. I'm sorry. I'm woefully ignorant of news, purposely so. Marlene's asking if you were in on the light filter trade at 940, would you move your stops down now? Well, let's take a look at that. So here's our late filter entry signal. We got a couple to choose from. We got that one, we got this one right here. Essentially, it's the same signal, right? Same signal printing two different times. Initial stops, well, as far back as possible, let's say initial stops were up here. And the market has recommitted to the short side twice, and currently we're looking at a little bit of a retracement. I would probably have my stops above here, Marlene, but if this bar continues lower, I think I would start to become a little bit more aggressive with my stop. Ideally, this bar will continue lower. We'll get one more bar just to confirm that the sellers are really interested in trying to move the market down. At that point, it should be relatively safe to bring your stops in and avoiding a premature stop out. Because that's where we're at right now. We're playing tag with the market. We're trying to stay out of the way, not get stopped prematurely before we have a chance to actually make a profit. Of course, if you were running a high probability profit target, you probably would have been out already. If you delayed your entry, maybe took a second push, well, then we're still making the market work a little bit longer. So this would be a second push entry right here, where we allow the signal to engage. We see where it flinches, and then we look to get in. And very often we can get by with a tighter stop in that scenario, maybe not this time. Yeah, the buyer's really putting the boots to the sellers right now. We'll see whether they can recover all the way to the high of the morning or not. I think the sellers should show up here soon. Oh, I see. Okay. No, Russell says today is the first day for it, for FANG, and it is a futures index made up of Facebook, Amazon, Netflix, and Google. Interesting. No, I'll have to look for it. I'll have to see whether I even get it. I like Mark's comment here. Mark writes, I'm like Mark taking the hunter mentality. I think of my trading like a deer hunting or being a sniper. I'm waiting for my shot to set up so I can pull the trigger. Sometimes you wait all day. Others, it happens quick. It's all in the waiting. And that's that famous Jesse Livermore quote as well. The money is made in the sitting and the waiting, not in the trading. I alluded to this yesterday. The act of trading is not the same as being a trader. And I know it all is kind of esoteric, but there you go. Yeah, Scott says FANG. Yeah, FANG. Russell says it's supposed to be highly volatile. All right, well, let's go take a look, see if I can get FANG in the assortment. Yeah, I'm sure there'll be no shortage of volatility among those markets. No, not available. Not yet, anyway. Now that's on the Globex, of course, so it may be trading on a different exchange. Anthony, I don't know half the time if you're kidding. Some of the comments you put here. But Anthony says last call to get short on the NQ. Obviously, we're still in that sideways trading range, so the market's struggling. And it's like a big ocean liner too, right? You can't turn a market on a dime. Now the buyer's still pressing. Stinkers. The Raptor actually a lot more bullish right now. We are working a crossover buy. Yeah. Jeff says maybe the trend means sideways trend. I know this normally we would have seen a little bit of a smoother progression. I think what it is the wake of yesterday's trading. As the market struggles to find its direction, but at least we're at the top end of the trading range, so if the sellers are going to remain active, this is where they're going to try to get on board, I think. Well, there we go. Just watching and waiting. Yeah, I don't know. Like, Anthony makes a good point. He says we've tested this area 4 or 5 times now. So there's obvious resistance up here. There's no question. There's also obvious support down here. Normally, like even if you had drawn your trading range like this, normally when we see the market break like this, we expect a retracement and we even expect it to get back into the trading range, but not really, really deep, right? If we're retraced back into the trading range and we expect the trend to continue, we look for it to break out, and then we look for that saleable signal. That's the one right there. That's going to be the more reliable. Getting in a little bit early, as I did here this morning, well, like I said, you pays your nickels, you takes your chances. And on the bigger scheme of things, it's the same. Right? If the market is going to continue higher, we got to let it break, we got to let it retest, and then we look for the opportunities. If the market's trading lower, we got to let it break, we got to let it retest, and then we look for the bigger selling opportunity or the more probable selling opportunity. And I get it, you know, I get it. As traders, we're always looking for the best price to get in at. I was reading a trading book the other night, as I normally do, and let me see, where's my daily chart? I was surprised at the trades that the author was recommending. So whereas, you know, I'm looking, how can I get in down here? The author was saying, oh, well, we didn't get a confirmed buy signal until here. Right? So I'm the guy looking to get in here. He's saying, oh no, this is where we had our buying opportunity. And what he was looking at were things like, you know, breakouts and retests. This is actually a viable signal as well. The way I trade, it's a close above a resistance or a support zone. So I could have already been long there, but what impressed on me is how long traders were prepared to wait for a viable signal. And this is a well-respected trader. And he gave no thought whatsoever to all this that preceded it. He did not see this at all as missed opportunity. He saw this as what the market needed to do to build up momentum to get him to this point right here, where he was ready to buy. Right? That's the point where he was getting interested. It didn't bother him one bit that he didn't buy the Nasdaq down here near 5,700 and now it's trading at 6,000 or 6,100. He was just looking, what is the best opportunity for me? Where can I trade without being afraid that I'm going to be stuck on the wrong side of the trading equation? Yeah, Jeff says maybe the crude report. 1 second here. I'll pull up crude oil. I've been watching gold over crude lately. Not much going on in either, truth be told. Oh, I see. Mark says the FANG is on the ICE exchange. The CME is also launching a Bitcoin contract. Oh my gosh. There's a report out on the net I just watched from CNBC, put out about 18 hours ago. Wow. Now we're going to be speculating on Bitcoins. All right, so here's crude oil. We're about to go into crude inventory. A lot of times I like to bracket a crude trade. And for that, I'll use the OCO order. But I don't know if there's anything bracketable here. Certainly the top side, I think we can look at a break above the primary resistance zone as something viable. And I suppose we could set up for that. And then maybe add the sell order. restrict crude oil to a 2-tick slip. The other way to trade this, of course, is just to allow the market to engage, the inventory report to come out, and then see what kind of range it makes, and then trade it accordingly. Crude oil has really been bust the last little while. Not a whole lot going on. I guess I'm a little early on the crude inventory report. If I would like to see crude trade back here to around 57, then I could bracket the primary resistance and the primary support zone. We'll put that on the shelf for a moment. Come back to it in a couple minutes. And we're getting some mixed signals now in the Nasdaq, and of course that's not unusual in a sideways kind of market. All right, here we go back to crude, and right now I don't have much to bracket on the short side. I suppose I could treat this as the middle, and I could short below the next support zone. Could do that. I think I'll wait, just see which way the market is going to break. If it breaks to the upside, well, I got that covered. And if it breaks lower, well, I guess I'll just have to wait for a reaction. The euro dollar making a little bit of a move lower. So the crude report out now. Come on, give me one bullish bar and I'll bracket the low. There we go. Look at all the buying and selling that went through, and it evaporated after that. Oh dear, another flat crude oil announcement. Well, that was exciting. This is still a viable trade, by the way, if you were inclined to trade crude oil today. But honestly, it's kind of quiet. I would trade it not so much because of the inventory report, but rather because it's in a downtrend, and we did produce a number 3 signal back here, a hard edge bounce. So it does look as though crude may be trying, anyways, to head a little bit lower. The Nasdaq, in the meantime, still taking their sweet time to get some sort of discernible direction here. markets are really, really quiet. It's almost as though they're waiting for the other shoe to drop. All right, getting a little active selling off of the top end now. And that's to be expected near the top end of the trading range, even the intraday trading range. Okay, the hawk printing a red bar buy. Now this is interesting because these tend to develop near the end of a trend. Now, not much of an uptrend to speak of, really, but we've kind of gone through all the signals here. We had the first micro-macro cross, we had a little macro pullback, we had a 4-arrow consolidation, and now we're printing a red bar buy signal. So I don't know, maybe we will still see the market fall off here a little bit. Because we're at the top end of the trading range, I would anticipate a retest of the bottom end of the range. Now, whether that retest will stick or not remains to be seen. That's why it's a good idea to keep a book nearby, or I can pull out my guitar or harmonica and entertain everyone. Oops. We're still seeing a fair amount of overlap here in the market, which again just reinforces the whole sideways nature of things. Good question here from Phil. If I trade stocks with the Raptor, will it work with the indicator warehouse Renko bars if I set them at 60 as a representation of a 60-minute chart? No, probably not. The Renko bar, the indicator warehouse mean Renko bar, is a range style bar. And what that means is the bar will only print after the range parameters have been met. So currently I've set this at 8 ticks, which is the default for the Raptor and the Falcon. And you can see here with my handy dandy little logic counter that if the market prints at 63.21 quarter, then it will have made its 8-tick range and the bar will print. If it moves to the downside and moves to 63.17 quarter, it will have completed the 8-tick range and the bar will print. So long as it stays between these two values, the bar will continue to form. It doesn't matter whether it takes 10 seconds, 10 minutes, or 10 days. So long as prices stay within these two values, it will not print. If you set your chart at 60 ticks, that means each bar will be worth 60 ticks, obviously. And it will not print a bar until that 60-tick range has been met. Now, depending on the stock, what I would do is I would do a side-by-side comparison. So I would take my hourly chart. Where are you? Okay, so I would take an hourly chart, if this is what you would like to approximate. And let's put our daybreak lines back on. All right, so this an hourly chart now for the Nasdaq. If I wanted to approximate that on my Raptor, oops, sorry. Okay, so right now, the session opened back here a little ways. So the 8-tick brick might be a little bit small to approximate the hourly, right? I'm getting a few more bars here than what I'm getting on the hourly. It's not a lot smaller, but it is, I'm getting a little bit more data here. So what I would do is maybe instead of an 8-tick brick, I would maybe dial it up to a 10. And now I would take a look at the same chart. What's my data series? 24/7. Okay. So I would take a look at the same chart, and I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 bars representing the hourly from the overnight session. And here again, I'm getting a little bit more activity. So I may have to go a little bit broader still. Maybe we'll dial it up to 20. It may turn out that you're right, Phil. Maybe it is going to be 60 ticks. But this is how you do it. Okay, so right now it's looking like 20 ticks might be pretty darn close to the hourly Nasdaq. Yeah, actually that looks pretty close. So within each hour, it looks like the Nasdaq is going to make about a 20 tick range. So you could go with a 20 tick brick, and that will roughly approximate your hour. Now you'll notice that your signals don't develop quite as frequently because of the brick size. It's a good thing and a bad thing. The good thing is you're absorbing a lot of market noise, of course, by going with the higher brick value, but you're also kind of more committed to your system. Oh, actually, I'm not done yet. By going to the higher brick, I also need to adjust my Raptor settings. Now, there's a rough relationship between the two clouds and the hawk brick size. Roughly speaking, the first cloud, the faster cloud, is the same size as your brick value. So in this case, it's 20 ticks. The larger cloud is approximately 1.5 times your brick value. So in this case, it would be 30 ticks. And your hawk brick size is approximately 3/4 your brick value. So in this case, it would be 15 ticks. What that's going to do is it's going to filter out some of those less desirable signals. All right, that's a little better. So with a 20 tick Raptor, right now we haven't really produced a signal just yet. We did produce one off the London Open, and toward lunch hour yesterday we did produce a buy signal as well. But it's a trade-off, right? You're going to produce fewer signals. You're going to have less to do during the day. You can see here the day before we didn't even get a signal. But the day before that we got a very strong signal. So you could even treat this more as an end of day type system where it's going to be a long time between signals, but when they do print, you'll probably have a little bit better follow through because you're absorbing a lot of the market noise. Good question. Phil asks, do the mean wrinkle bars work better than time with the Raptor 2.0? Well, this is what it would look like on a 20 tick brick. The nice thing about the Raptor is, or all the DTS tools, is that you can actually use them on different formats. You can use time-based charts, you can use tick charts. I need to adjust the values back now to the defaults. Okay. So here now is the hourly chart with the DTS system, and you can see it's going to be a little bit more end of day type as well. Now bear in mind, I'm looking at the Nasdaq here. The stock you're following may be a little bit more active, so you're going to need to do these comparisons yourself. We didn't produce a signal yesterday. We produced a great signal the day before. We produced a signal yesterday here. Currently, so far today, no signal, but again, we would be looking on some follow through from this crossover signal here. I do know of a couple of traders who trade the DTS system on a time-based chart. They tend to go with a shorter time frame, however, and they use the time because their data provider does not, they're with interactive brokers and their data provider does not have tick data. So they use a shorter time frame chart to approximate what the tick data will do. For me personally, I like to stay with the mean Renko bars. I think there's a lot of advantages to the mean Renko bars. First is it's very easy to see who is controlling the market on the mean Renko bars, right? It's very obvious to see the price swings, which are not always so obvious on a time-based chart. The other thing, of course, is the system was kind of developed around the mean Renko bars, so it goes hand in glove. When Adam first came to me with the mean Renko bars, I was a 5-minute chart trader, and I was reluctant to use them, but honestly, after using them for a while, they are a great chart style. So I would encourage you to give it a whirl. It's going to take a little bit of experimentation on your part if you're going to try to approximate like an hourly chart or a 15-minute chart or whatever on the using the mean Renko bars. But play with it. You know, put the time, build a couple of charts, put time on one, put mean Renkos on another, have a couple different settings and just see how they compare. See how the signals follow through. Because that's the important part. You may have to scroll back a few days, however, because this whole week has been dismal. It's just been dead flat sideways. So you may have to go back a couple of weeks just to see how the signals play out and just prove to yourself that there is some follow through. But that's the only way you're going to know for sure, is actually just to play with it a little bit. And it looks as though my ambitious shorting attempt got cut down here as the Eagle put in a new high today. So, you know, it just confirms what we've been watching. The market breaks out. There's no recommitment to the short side. They're come up now. They're testing the top end of the trading range. It's going to be the same kind of thing. We're going to have to wait and see whether or not they can stick it out. And unfortunately, that's just the way it is. There's nothing we can do about it right now. Just got to wait the market out. All right, gang. Yeah, like Scott says, gotta go, Eric. Gotta go watch some grass grow. And that's kind of what it's been like here this morning. Hopefully tomorrow things will loosen up a little bit. We'll get a little added volatility to the market, or at least some directionality. I don't care so much about the volatility, but maybe we'll see the market pick a direction and stay with it. All right, gang, have yourselves a good day. If you're trading today, be careful. Shorting the top end here might be the way to go. Buying off of support, it's a tough day to be sure. Sideways markets always are. See you tomorrow. Bye for now.